Hey, good morning, everybody. Morning, Kimberly. On top of it this morning, Dan, Francois, Arturo, Valerie, Anderson, USA, Alan, Jan, David, Craig, Larry, Rongaber, Patrick. Good morning, everybody. Got the OG white flavor of Zero Monster. Morning, everybody. Ted, morning. Whoo! Are we getting the bounce? And guess what? Mortgage rates hitting 21st century highs. What does that mean? Well, you know, the first century started in the, 1 to 100. So the 21st century being all the after year 2000. And we're hitting the highs since the year 2000. It's pretty crazy, actually, when you look at the chart. And we're going to pull that over here in just 1 second. I don't know why it minimized, but now there we go. And flip me onto it. There you go, right there. We're right up near it. And we're basically right where we started into the 2000s right here. Had a little spike up, just past 8%, so we're getting there. Not going to be much longer. And this is from bankrate.com. Pretty wicked right there. Not far to go. So what does that mean? It means that, and look at that steep curve going up too. This means that interest rates for houses are climbing at a wicked pace. And historically, look at the long time span of people buying houses forever. We're just at the normal. Actually, we're kind of reversion to mean, but we're not used to that. We haven't been used to that for years and years and years. In fact, this was kind of like zero interest rate policy time frame down here, and we may not go back down to that level in the rest of our lifetimes. So houses are more expensive on a real out of your paycheck basis, and those high selling prices. This adds a significant chunk of money to it. When you look at that being an annual rate, you're gonna pay 8%, 7.55% per year interest to buy that house, and that's removed affordability out of a lot of people in the economy. And there's 156 trillion dollars in assets out here in our economy in the U.S. right here. Look, 156 trillion. Here's how it's kind of owned. Almost right down the middle, baby boomers. Maybe that's you. It's not me. I'm over here in Gen X. But baby boomers own half of the assets in the U.S. And a lot of it real estate right there. Yeah, $18 trillion in real estate. Then Gen Xers own 13 trillion, 13.6 in real estate. Yeah, interestingly enough, the boomers have most of their, the largest chunk of their money in equities and mutual funds. So they also own the stock market. And then pension funds, which is also owning the stock market. Those two together. Then you look at Gen Xers, only 8 trillion in equities and 9 trillion in pensions. So you add those two together, and we're not even catching up to one of these over here, hardly. So definitely more money out there, and boomers control kind of the stock market right now. And then you have the silent generation, older, boomers' parents, a declining fraction as they meet their end of life. And then we've got millennials, which is everybody under 1981, even though Zoomers are in here too. Coming in very, very slim here. 5 trillion in real estate and not a ton of assets here, only representing 8.5%. So, who controls the wealth? There you go. 50% in boomers, 29% in Gen Xers, and then the rest of everybody in the little piece at the end. I just thought it was interesting to bring up. That's these people getting started are having a hard time being able to afford those interest rates. That's not as this shifts out of the hands of boomers and into Gen Xers and millennials and Zoomers. Those interest rates are going to be painful to try to absorb. And we're seeing a lot of property going into commercial holdings. So those private equity, and some could say that's the pension funds or mutual funds. Uh, yeah, hard to know exactly, but yeah, and somehow we're short on housing. Well, even at those high rates, it's crazy. But there's more people that want to move out of the boomers and Gen Xers house. So, all right. Yeah, I think the institutional buying has absorbed a lot of the housing, and that's what we're creating shortages. I think that's honestly, I think that's where the shortages are. You've got institutionals buying up what used to be, housing that we would own ourselves. Now institutions are buying it, and all the advent of buy it and rent it, running Airbnbs. I mean, Airbnb is taking up a huge swath of the availability just for short-term rentals. Golly, excuse me. So anyway, mortgage rates, that's definitely going to have an effect at some point here. We can't just go ripping up like that. We haven't done that almost in my entire. I don't remember ever seeing this in my entire trading career. So this is a new thing happening, and I think it might come to a head. You can see in 2000, leading up into the housing crisis, we were just kind of bouncing around down here. Not really, nothing too crazy. Now this is pretty crazy. This crazy move. I mean, we went through from about 3% at the beginning of 2022, just last year, and now we're at 7.5% in what, 19 months, 20 months. So anyway, this is going to be a problem. Is it a problem today? Not today. Is it a problem tomorrow? Probably not tomorrow. Next week? I mean, something's going to break. It may not be next week. It may not be next month. It may not be, maybe next year, maybe out to 2026. I don't think the market can absorb this for a long time. And as I've shown in the past, those interest rate raises take a full 24 months to trickle through the economy. And April was the first one. We're not even 24 months into absorbing the first rate raise, and we can just keep doing it. We just did one last month on the FOMC. This is all going to come apart at some point. Just be careful, all right? We've got a financial crisis brewing. It's going to happen, but not yet. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell anything, financial instrument or otherwise, and I may never get another prediction right again. That financial crisis I'm talking about may never happen. Yeah, right. But anyway, if you desire personal financial advice, hire and consult a financial advisor. Has a fiduciary duty to take care of you. If you want to chat with me, like these fine people on the chat, like Goose, Lieutenant Colonel Goose retired, make sure you subscribe, and that button right over here where the monster is, right down there, hit that button and subscribe. A couple seconds later, you will be allowed to chat with me. Now, let's pop up one we haven't popped up lately. DGS2, this is the rate. The blue is the market rate. The orange is the FOMC set rate, Fed funds rate. And we are up in this zone up here. The Fed's fund rate up here, that's their target zone, their orange box. We are hanging out right here. We are still climbing, and that supports higher rates at this point. Now, back in January, I drew kind of a sideways. We've kind of gone sideways with the rates. And then I speculated that maybe we see inflation pick up again. The real rate, the DGS2, the 2-year constant maturity rate, picks up again. And the Fed funds rate has to start climbing at an accelerated rate again. There's a distinct possibility that we see this play out. Why did I draw it this way back in January? Because that was the one scenario that nobody was talking about. Nobody out there was speculating that we might see it go sideways, drift a little higher, and then accelerate again. Nobody out there. I never saw any mainstream media, any so-called financial analysts or anything talking about this was a possibility. Everybody's still talking about the fact that we're going to cut rates and go down again. I think we could see an acceleration of rates. Now, at some point up here, we're going to cross, and blue is going to drop, and orange is going to either maintain the high or, continue higher. We've seen it back here. We've seen it back here. We've seen it back here. Every time this happens, at least in my trading lifetime, we get some sort of financial crisis, and then we cut rates. And that's what everybody's counting on right now. But I think maybe we do something a little different this time. We go sideways, we accelerate again, and then we get that bigger problem. And this may not happen until 2025, 2026. I'm just spitballing. We may accelerate again. Rates may go even ridiculously higher. Inflation may rear back up, especially as that cost of housing, cost of fuel started going up again. Now, getting a little bounce off the bottom of the box. Beautiful. Yesterday, beautiful. Looks like we may get continuation today. We had continuation overnight. We may, the point to watch out for is this orange box right up here, around the bottom of it, kind of sitting around 44.80. The top of it kind of sitting up here around 45-ish. All right. This is the actual cash index, not futures. And if we break above that 45 area, we're probably heading for extensions, 46.50, 47.27, if not even higher. All-time high comes at the red line there. Right there, right around 4,800. I think we were just pennies shy. And that's not a stretch from here. This pullback could be the last one we really see before we break all-time highs. Could be. This was big enough, deep enough that it can take us right on up there. Now, would it look better if we did touch the roadmap line? Sure, it would, but doesn't have to. Certainly does not have to. There's no have-tos in the market. I don't know why all this disconnected in between there. Kind of weird. Let's refresh the list really quickly. All right, S&P. On a candle basis, that's what we had. Market should open in about a minute and a half. And right there's the trend. If we stay below that, we're probably heading down. Just real simple. That was the channel we were in, drifting down. We broke lower, come up, hit the bottom of it, bounce down. Or if we break back in, we'll probably rally back up to the top of it at the minimum, 44.75. Break above that, starts turning the tides up. And that corresponds with those fib lines right there. S5FI was down in the reversal zone. We can definitely see this reverse, even though we had a strong little bounce yesterday. Didn't really get any change to the S5FI. We've got a long way to go back up to the top. Be careful, it can be a strong rally. There was a lot of shorting happening. Now we are sitting here on a potential, and I drew that potential head and shoulders pattern yesterday. See how that played out. Pull it back over, and pretty much playing out. I went long some ES. Look at that. Played out right to the top. That's an Elliott wave reversal pattern, by the way, right there. There's the market open. We came up right to the top of that pattern and stopped. Coincidence? I don't know. Maybe. Looks like we're getting a little positive green action. We're back in the trend in the channel. We have the 30-minute to deal with here. Then we've got the top of the channel up here too. So several levels to deal with. And this comes across those that found the low, found the low, found the low, broke below, found the top. That should be a resistance zone, and it just happens to correspond with the 30-minute roadmap line. And the hourly is above it. So That'll be a resistance zone right in that pocket. And then we have the fib lines right above that. So there you go. So ES, if you're unfamiliar, ES is the S&P 500 futures. They trade 24 or 23.5, and they're closed for an hour for reconciliation, but they trade basically 23 hours a day, 5 days a week. Opens on Sunday, closes on Friday, and this is how mainstream media knows what the market's doing before it opens. When they talk about it on the news in the mornings, NQ, NASDAQ futures right here, breaking above the 1 hour. This looks really, really nice. We can see a strong recovery here. We came down, we essentially got close enough to fill in that gap that we can call it pretty much reconciled. A little dip down there, dipped into the gap. Didn't fully close the gap, but we got darn close. And this can go ripping out at this point. That was all I really needed to see. Now, we do have a resistance zone built up from right over here. Get through that. And it's probably watch out above. We could go make new highs. This one much closer to all-time highs than S&P. It looks like 16,400 and 16,900 on the upside. If you want to know the QQQ price, just divide by 41. That's the factor. Need to remove a few fib lines. Been a couple days. Came up a little shy of the roadmap line. I'd love to see it hit, but this may be all we get for now. Just be careful. We do have the resistance right up there at the 618. So looking at the QQQ, 396, 407 potential upside once we get on the other side of this resistance at these fib lines. And see the gap right there? We basically filled that gap and game on, right? Russell came down to the daily roadmap line, found a little support just under it. Can we bounce and go higher, or are we going to crush and go lower? It's the big question here. And not sure yet. Not sure yet. We do have some work to do to go higher on Russell. Russell usually leads small caps tend to lead the market, whichever direction. So far, they've been chopping sideways, and that's kind of what we've gotten in the market. They started their downward trajectory back here in, really, they kind of topped out in 21 and then started down in 22, and that's the way the market went. And we've just been consolidating down here, have not broken higher than August. And I don't know. If we can break out of this, that'd be positive, but right now this may go lower. So lots of arrows on the chart. Yes, there are lots of arrows on the chart. And this was the retest I was expecting. We got darn close to it. Didn't fully test it. Target right there. If we go down further, and if we bounce from here, we get back above 1945. Probably heading on up to 21, possibly 2200 on Russell. That's IWM if you're unfamiliar. Oil keeps chopping around a little bit. I would be very happy if this would dip down, hit this roadmap line right here on the daily. I would probably consider adding some longs for a move up to 94 if we can get that final dip down right there. GC, hanging out at the roadmap line. Not really showing any conviction for anything. If we get below the lows from back here in June, probably going on down. Otherwise, we can form a strong bounce from this area right here. So there's business cases for oil going lower, but there's also declining supply, getting a lot of draws. So it's an interesting market dynamic right now. Bitcoin just consolidating under the roadmap line. We tend to do this at the lows before we get a pop. So we get that big flush out, wait a few days, and then get a pop. The few days can be a short few days, or it can be a longer few days. If we're going on down though, it may have a fake pop and then a bigger drop. So watch out for a fake pop. We want to get continuation higher. Don't just want to jump it. And just waiting on Bitcoin. Ethereum may dip into this area right here a little more fully. It did hit the zone where I expect a reversal to hold, but we're not getting any bullish reaction after that. Now, crypto does tend to be a risk-on, risk-off asset. You know, we've gotten a large flush in the market and risk-off. I mean, that's what that means. We get a big profit-taking, risk-off environment, and that's what we see. Dollar right here. Stephen, just news doesn't matter. It doesn't really matter at all. It may matter for one individual stock. So dollar right here, we have a mini trend line going, and we're finding resistance right at that trend line. We get above that trend line, above those highs right there, we'll come up, probably test this zone. If we get above that, we're probably going on the bigger retrace of the entire drop from back here in summer, fall of 22 down to the lows we made in July. So that was almost a 12-month drop, 12-month decline. Probably could see a retrace. We hold that 618, we can go on a bigger decline. Tesla moving up pre-market. For those of you in my VIP group, I did add a Tesla position yesterday. Looks like it may retrace the gap down. Be careful. This is not I don't day trade this. Excuse me. I long-term trade it. I bought a position out as far as I could go in a leveraged long. Looking for that to continue back up at least to this trend line, and we may see it break on out. At this point, it has set up a measured bounce setup, and that could take us up to this 425 area. Is it proving it to me yet? No, I mean, it's just in the early stages here. Let's talk about it briefly. Yeah, that was like a 27, 28% pullback. Looks like right there from the high down to the low. Beautiful, beautiful, beautiful. Now, run the high, run the low. Resistance comes in right here, right where it consolidated. Look at that, it lines up right with the fib line. Beautiful. That is an indication that it's not like a rule or anything. It just indicates that maybe this is the bottom because that fib line happens to hit right where we consolidated. It's funny enough, the bottom of moves, when you draw the fib lines on there, the 618 usually comes in where the consolidation was, and it happens to line up with this gap over here also. And maybe it's coincidence. I don't think so. I think it's just the way nature kind of intends it to be. Interesting little thing there. So yeah, we got to get through those Q3 earnings, which are coming out way over here, way over there. So we got a little ways. We could play around for several months here. And this thing can go way up there, and we could top out. You know, we start getting these targets way before the earnings. Watch out for a pullback on the earnings. So I mean, we got a lot of time, a lot of potential here for a bullish move. FN, nice pop, but remove the right up to the 1272 from before. Right up there, retrace back down, then pop up to the other one. That would be classic. Yeah, nice move. Retrace to here, and then potential to pop up to there. ASML, potential for this to bounce here. We get back above this orange box, and it's game on for higher target for higher targets up there, 800, 850. MVDA, right back up to the top. Be careful. This has earnings tomorrow after the close. I may buy a few shares of NVDS. May buy a few shares just to see. I may wait till tomorrow. I think that the expectations are overly high. Everybody thinks they're going to absolutely crush the markets. Let's look at this. You know, their price to sales ratio right here, historically, last 5 years, price to sales, 8.5. It's the blue number. 14, 19.57, 21.5. And last year, 18.93. Currently, price to sales. This is price of the stock versus their all sales, no costs. Sitting at 41.66. And it's probably 42 point something today. That's like double anything for the last 5 years. They do have a gross profit margin. Last year was at 57%, but they're going to need to sell a crap ton to justify a $1.2 trillion market cap. Now, you may be like, well, JT, there's lots of other stuff with crazy market caps. Like, Tesla's had a pretty crazy market cap, right? Look at that one. Price to sales, 7.97. It kind of hangs out. 2, 3. Had a 24, 22, and then we came back to 5. I'm not even talking price to earnings. I'm talking price to sales. All right. Talk about Apple. Huge market valuation, right? Price to sales, 7. Hangs out 4, 3, 7, 7-ish, 6, 6.7, 6.2. They make about 43% gross profit. Now you may say, JT, you're crazy. I mean, NVIDIA is going to save the world. Be careful, okay? Another one that's historically had pretty crazy valuations. Look at their price to sales. 5, 5, 6, 7, 4. And we can pull up, this one stayed pretty crazy for a long time. Pull up Amazon. Look, 3, 3, 4, 3, 1.6. So they're technically undervalued. That's one reason I was thinking that Amazon had opportunity to catch back up. Price to sales, 2.59 right now. Still well below the 3, 4 we've historically had. All right. If you have any other ones you want to go through, let me know in the chat. But, that NVIDIA just seems like a huge risk to the downside at this point. So be careful on the earnings, especially for long. FNGU, looking like that can be the bounce point. We can bounce and rocket out of here. Next extension. Now, I do caution that leveraged instruments do not always follow the pattern. Resistance right there where we did the shoulder. Next target up 250, possibly 278. You want to do Meta? Let's do Meta. Their numbers aren't too crazy either. They move a lot of money. Look, 6, 8, 9, 8, and 2. That's why Meta had a huge potential to go back up. Your P&S sitting at 6 right there. All right. And I already did Tesla's price to earnings. SYM, P&S at 2. So there you go. That's things that have price to sales over 20. That's the danger zone. All right. When we get over 20, that's where we see these things go down like a lot. BYND. Here we were at 19, 8, 1.8. Price to sales currently at 2. They're losing 7% on their total revenue. When we have price to sales over 20, we typically see a big drop, big decline. See, what is the Zillow? This one was pretty crazy before. And it didn't even get over 20 for a year. And let's see, what's another one? Roku. Roku was pretty crazy. At 23. You see what happened to them? 11, and now 1. When they get over 20, that tends to be the point where it's danger zone. And we see stocks drop 60 to 70%. I'm not saying NVIDIA is going to drop 60 to 70%. I'm just saying it can easily get cut in half. 30% would not be out of the question. It's, in fact, dropped 30% many times in its past. So that's my cautionary statement on chasing NVIDIA long at this point. Cautionary statement. So MDB looks like we're on a path to retrace to the roadmap line despite the pop this morning. SOXX, that one could bounce from here. Potential. I like SOXL a little better than SOXX, but got resistance right above us. SOXL looked like it had a measured bounce, or not a measured bounce, a roadmap bounce set up in place. Can go on a nice move. We do have resistance right here. Now to fit on with all this, AMD did a measured bounce. Not measured bounce. I keep saying measured bounce. Did the roadmap pattern. It retraced to the roadmap. AMD, if it breaks back above these highs, around 121, probably go on an extension to 141, possibly 152. So, looks pretty good there. ADBE, Adobe just consolidating under the resistance. It's going to have looks like it's going to have a hard time breaking out, but it is consolidating pretty high. Google also consolidating high, has a huge opportunity to run on the next move up. Amazon did not really get a huge pullback either, and huge potential to extend higher. Lowe's, nice pop. This could be potentially nice potential for that to be all of the move down to the, basically stopped at the bottom of the orange box. Potential for it to rally. Does need to get above 230 on the more conservative entry for 242, 249. Baidu, just playing around down here. Really looks like it wants to extend lower. China having a bunch of issues. SMCI, that could just be the bounce. I mean, that could be it. Resistance is all the way up here where the gap was, and then 390, possibly 433. This one seems like it would be crazy, especially with the move that is done right here, this exponential type move. But we look at the price to earnings, price to sales, price to sales 1.93. And historically, they've set at 0.5. So they are elevated compared to their historical. Their gross profit about 18% on whatever their sales are. Don't know that they'll justify their highest stock price, but has potential to go up further without being too crazy. Come up to a 4 even, and that would be like a double from where we are now on the price without even increasing the sales. So we could go from 259 and we can support prices up to 500 and not even be too crazy. So NVDL, beautiful pop. Watch out for a drop. Meta. This pattern would look best if we retraced that back out. Back to the roadmap line. Back to support. Snow. I'm not saying it's going there. I'm just, it would look best. Snow, I was talking about this looked choppy and like we may extend lower. I was talking about that yesterday. Bulls. That's a potential bounce right there. Market roadmap style. Caution on leverage and following the patterns. Break above that zone right there around 75. Can take us up to 93, possibly 102. SMH. Didn't quite make the roadmap line here. Cautious. NVIDIA back up to the highs, but SMH not quite there. DKS. Oh, look at that drop. Ouch. So much for retail sales there. Wronger needs to go across the parking lot, hang out at Dick's House of Sport more, I guess. Anyway. Right down to the extension. This can be a bottom. It can very well extend on down to 100. That's a cautionary thing there. That's what it looks like when the pattern fails. And that choppy overlapping was kind of an indication that we may see a fail. It could accelerate. It could come on down. We get below these lows from back here in November. It can go back and retest these lows down here around 67. ASO, Academy, also getting whacked. Golly. I think with all the kids' sports getting going, looks like we're going to see a deeper retrace out of Academy, potentially down to 38. Crocs. Well, I drew the arrow on there a while ago. We're kind of holding this support right here. Holding it so far. If we get below it at all, probably coming down in this target zone. BJ Warehouse. Don't have any of those around here. And still bearish. Still a bearish chart. Could turn the tides, but that's not a continuation pattern at this point. Nike. That's 5 down. It may retrace back up. Resistance is going to be right here. We could see it retrace back to here and get continuation lower, matching this move here. And take it down to that 88 area. SOS. Oh, God, what a nasty chart. It's like a heartbeat. Boop, 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 boop. I don't know how you trade that. Not any way I trade it. It's not something I find reliable. PCT failed to break out. Retraced. May go right back to the lows. Oop, moving my lines around instead of grabbing the lines. See how the lows, low, may drop right back to that. Doesn't have to, but that's what it looks like it might do right there. What it might do. Macy's, ouch. They actually reported good earnings, but their outlook was kind of crap and getting punished. We could be near the bottom, but that looks pretty gnarly. Pretty gnarly. Let's see where we're at on a bigger... The low to the high. Yeah, if we get below 11, we're probably going to make a lower low than what we had back in COVID. Oh, man. It's going to take a move up through these highs to turn the tides. Macy's could go out of business. A lot of people thought Sears wouldn't go out of business, and look what happened. So, Kmart, I mean, if Macy's doesn't get their crap together and get back with the consumer, I mean, you got JCP. I mean, that one went out of business, basically. Took private equity, you know. Be careful out there on chasing stuff like Macy's. That one can go out of business. I don't care, you know. What do we do about the Macy's Day Parade? Well, may not have one anymore once Macy's goes away. So be careful. All right, that's that was the list of movers for today. Bias for today. Cautiously bullish for at least a retrace higher. Cautiously bullish. That would be what I would say. And we're just talking about, you know, we need to break back above that high we made overnight. Need to get back above that for continuation. Otherwise, we may be in for just a retrace. We start breaking below. Let me see. See something else here. We start getting below the 30-minute roadmap line on the futures. Watch out. We start getting below let's see, cash index, say right at 39. I mean, 40, 39, 43.94. I'm looking at the three, just not even paying attention to the first digit. We get below 43.94.95. Let's go a little bit conservative. 43.90. We get below 43.90 on the cash index. We're probably going lower low than what we saw right over here on Friday. So watch out for that move right there. There's your level. We get below there. Went down. If we hold support, we can go up. Top of the channel. At this point, retesting the breakout. We may take back the overnight pop. That'd be pretty classic. Head back to the close. Get the people trapped. Bounce off the 30-minute roadmap line. There you go. All right. That's what I'm watching for right now. If you want live updates all day, link is in the description. For the people that support me with monetary, the dollars and cents, people support me and my family, I go above and beyond, give you charts and advice, not really advice, but charts and guesses on the stock market, where we're headed next, share my trades, all that, links in the description, like $5, come join me. And I'll see you later. Remember, 30 minutes of awesome coming up at 5 p.m. tonight. I will take your request for 30 minutes at least. And it's always a good time. So come see me. I'll take your requests. Check out whatever you want to check. Smash that like button, as PD says every day. And really, more beneficial than hitting the like button is just to share this with somebody you think might get some benefit. A friend of yours, anybody that is interested in trading, or has a trading account and whatever. Yeah, share it. So I'll be back at 5 p.m.